preparing the live stream here. Hey guys, how you doing? This is Dr. Greg McLeod. How you guys doing? Hello, hello, hello out there. This is Dr. Greg. We're getting started. We're doing live stream Thursday live. How you guys doing? Hope you guys can hear my voice and see my screen. And we're gonna get started momentarily. Just waiting for the live stream to kick in, and we're gonna go live right now. Okay. Hope you guys are doing well. Happy Thursday to you. Happy we got day before Valentine's Day. Happy Valentine's Day. Lots of love to all you guys. Hope you guys can hear me. And we have a great program for you today. I want to welcome all the new people to our fastest growing group, the Live Forex Day Traders Den, where we can effortlessly pull profits out of the market. And so big howdy do to all of you out there. And just go ahead and tell me in the chat box where you're from, where you're watching from. And I want to welcome all our new members. And all our old members, hey, I recognize you too. And all the Pip and Runners who are part of the Elite Traders University Pip and Run Forex Mentorship. Glad to have you aboard as well. And we have a really good program here today. We're going to be talking about one of my favorite topics, and one that you have really resonated with, and that's trading with Fibonacci. You know, if you've ever had problems with, if you're a Forex trader, this is for you, in which maybe you're trying to time your entry and you don't know like when to get in. Knowing when to get in is one of the biggest problems that traders have. You know, whether you're trading stocks or commodities, you know, your entries, your best entries will make sure that you have the most amount of profit when you could enter at the right time, right? It's all about timing, right? If I say, knock, knock, who's there, no, why the chicken crossed the road to get to the other side? I ruined the joke because my timing was off, right? There has to be timing, and there's a timing and there's a rhythm to the market. You know, there's a rhythm to how things go. And so we want to make sure you are in tune with that rhythm. And I'll show you something with sacred math, the Fibonacci, the story of Leonardo Pisa went over, the guy who created the entire pizza. Well, anyway, he came back. He returned back from Asia, and he brought back the Arabic number system, where instead of using Roman numerals I, and IV, right? They look cool on a watch, but try adding IV and IV and it's X. It doesn't make any sense, right? But he brought back the Roman numerals, which, like on most clocks, those are Roman numerals. We can thank Leonardo da Pisa for that, right? He also brought back the Fibonacci system, the numbering system. So really, he took a numbering system, he put his name on it, but it's actually more of an Arabic and Indian, system, right? And so what he did was he just take the first number and add it. Like you take 1 plus 2 is 3, 3 plus 2 is 5, 5 plus 3 is 8, right? 8 plus 3, 5 plus 3 is 8. 8 plus 5 is 13. 13 and 5, 13 8 is 21. So it adds the previous number to the number before it, right? And so that's what it, and then what we're taking is the ratio between those numbers. We're taking between the 3 and the 5, we divide that out, and we get a 0.38, 0.382, right? And so you start creating that ratio. That ratio, you find that in nature, whether it's the mountains I'm looking at, the beautiful mountains here in Las Vegas, or looking at the rivers or the galaxies, or even the formation of your ear. It all forms a Fibonacci retracement, a form of Fibonacci cycles, right? And so these are found in nature, whether it's the petals of a flower or the piano, musical keys, 1358531, right? All those are Fibonacci numbers, right? They're all part of nature. And so we're human beings, but we're made naturally. And I call it the fingerprint of God, because basically you find this ratio, phi, PHI, the number is 0.618. It's 0.618, very important number. And it's a growth expansion number. 1.618 is the counterpart. And even my niece is born on 618, which is a Fibonacci, right? So 618, and I'll show you how that actually works in trading. We can actually use this numbering system. You say, well, Greg, I'm not really good at math, and numbers make my head explode. Don't worry. I'll simplify it, I'll show you some of my charts, and show you how we can unlock the power of Fibonacci using candlestick patterns at those key levels of support and resistance to find low risk, high probability entries in a snap. Okay, so let me go ahead and share my charts with you. I'm going to go ahead and share. What I'm going to share is a chart. Okay, let's see if we can bring up. All right, we're going to. I'm going to do this in MT4, and I'm using a broker called Ox Securities. And if you want to see, I got the Ox on my shirt, right? And I'll give you a link to that really great brokerage there. Let me go ahead and share my screen. I'm going to share, and sharing is caring. Okay, and here we go. Okay, so this is a typical MT4, and so what we're going to do is going to start from scratch. We're going to start with maybe the pound dollar, right? So I'm going to go to chart, go to pound dollar, and then I'm going to put our template there, load, and put. I'm just going to put some color candles here. Color candles, okay. And then here we go. So this is I usually start the higher time frame chart. We're going to start with a daily chart, right? Actually, start with a 4-hour chart. 4-hour charts are called our dealer charts. Dealers use these charts to this time frame, right, in order to better get a view of the market, how they're going to screw the retail traders. You can see where the stops are. You can see where the big turning points. There's 6 4-hour candles in a day, right? And so looking at 6 candles, you can get the overall, a very strong trend is built on the 4-hour chart, right? And so we can take this 4-hour chart on, see, doing here, right? And okay. And what we want to do is to basically look at the last swing high that we had in the 4-hour chart. So we're over here. I can move this over here, right? So that's the last swing high right here. We have this big swing high, lots of congestion right here in this 34 or 42 area. So Greg, that's a long time ago. But Fibonacci, every move that we're seeing in the market is a Fibonacci move, right? And I'll break that down to you. But we want to look at a couple of tools. There's a couple of tools here. There's a draw Fibonacci retracement, has an F on it, right? And there's a Fibonacci expansion tool. We're not going to cover that right now, but we're going to cover this Fibonacci retracement tool. If you don't have it, you can right-click the line menu and customize, and then you can find the tool. If you find a Fibonacci tool, and then you can insert it and add it. I've already done so, right? So I just click insert and it moves over, and then click close. Okay. So I click that tool and I want to go to the top. When we're looking at retracements, we want to start at the top and we want to click left click and drag this all the way down to the last swing low. The biggest swing low we had was here. That was January 7th. So we put the low January 7th, we put that low in, right? And now we have support and resistance levels built in. We can see the 23% retracement acted as support, right? And we bounced off support, and now we're moving to the next level of resistance, right? Now, to make the levels clearer so I can see price, I usually put the horizontal line on there, and that'll tell me clearly what the price was. At the 23% retracement, this is the Fibonacci level, we bounced at 1.2407. So that's support, right? And then I'll take another horizontal line. I click the horizontal line tool. I'm going to left click that, go over to the Fibonacci levels of 38% retracement, right? And this is a 38% move back, or like a discount. Okay, if we move from 34.42 down to the low, let me put the horizontal line on that so I can tell what that is, right? The low was at 12093. Okay. So basically, we moved, if we take a little calculator, right? And we can see what these numbers actually mean. We moved from 134.42 down to a low of 12093, right? And that gave us, we moved down 1,349 pips, right? 1,349 pips. So if we were to take 23% of that off, right, times 0.23 equals, right, negative plus 1349. Well, we'll be, the other way around. I have to add it. You should have added, right? So 12009 backspace 12093 plus 1349, right? I think it's 134.42, right? I must have missed the number here. I'm missing a number here. 1209 backspace 093, right? 2093 120933, right? Plus 1349 122.28, right? The 122.28, well, we're somewhere in here, right? So this is a 23% off that many pips. This is 38% off of that number of pips. This is 50% or half the move. 50%. This is 50% pullback, right? This is a 61% pullback. So you think of it as, 1/5, 1/3, 1/2, 2/3, 3/4 of a move, right? And usually price comes to those areas, right? So what we would do is look at, we would look at getting, okay, let me undo this, right? And let's say we were looking at the market, this was playing around at this level, right? We made a lower low, then we make a higher high, a lower low. We bounced off this area, right? So now we have a bullish engulfing, right? This is an important pattern. We have a bullish engulfing at this area, right? Right here, right? So I can look to get long here with a stop below the line, right? And then look for a move. I can look back or look ahead and say, okay, well, this is my next level, right? So this is my target. So here is my, not Walmart, Target, right? So if I'm entering somewhere in here, that's my reward. And then here is my risk, right? So here is my risk, right? So risk to reward, probably filled up here. So it's probably not gonna be that good, right? So I probably got filled somewhere up here. And then my risk is actually here, right? So if I entered on this candle and I'm entering somewhere in here, that's my entry, where these two meet is my entry, right? So I entered here, and then my target is here, and I can look at the Fibonacci about 4 or 5 pips below the Fibonacci, right, as my stop. Well, see, now I have a plan, right? I've got this move. I can draw a trend line across here and say, look, I got a trend line here, right? Rising higher lows, maybe not a higher high. Well, this very powerful candle that happened at this level, signifying that there may be something to go. Now, if you saw it here, maybe you got stopped out, right? And then you just try again. and then price rolls up, right? And so, right, we look at so this is bullish. So I would even, like with this Thursday night, I'd look at maybe even looking at a lower time frame and try to find a way to get in this trade. And maybe if I can do a nice risk to reward, I can look at maybe going down to the 5-minute time frame and scalping this for a bit to try to get that move from here to here, and then my risk is here to here with a target, meaning that looking at that Fibonacci is my target, right? I was just talking to a young man by the name of Albert. Albert is in Houston, Texas, and he was telling me that he had learned how not to be greedy. How wasn't sure like when to take his profits. I said, when you throw a Fibonacci on there, you gotta know that this is a wall. I'm driving a car, and as I get closer to this wall, I'm not gonna have much space. So I need to like set my take profit just below this wall. Now, chances are it could blow right through 126.03, right? But chances are it will not, because this is an established level that might be respected. And so let's say I can drop down to let's drop it down to drop it like it's hot, right? You just drop it down, and then I'm gonna do my Snoop Dogg impression. So we got like a high and tight bull flag. You can see price came down to this area here. That this is not a fib. This was just old level support, because we can see that we are from that retracement area, from the fib, we are still making this higher lows and higher highs. We're in an uptrend now. We are in an uptrend, right? We're making higher highs and higher lows, right? I'm gonna move this out of the way so you can see, right? And so I would look to actually to get. Let me put this in a demo account. Let me see if I can log in. All right, log in the trade account, and let's go into a demo. Let's see. Oh, it didn't erase my lines. I hope not. Oh no, there they are. My lines are still here. Right. So let's say we put well, let's see. Yeah. So see, when you look at long at 25.63, what was it, 25.63, and then we look at take profit at 126.03. So that's a 40 pip profit that we can take, right? And looking at that, we can also take a fibs on, because we have this fib. This is a 4-hour fib on a 30-minute chart, right? You can even go down even as far. You can down. Look, here's your 1 minute, and we have a trend line that's holding, right? And we can still look at, even say maybe I put a buy stop above the high, right? 125.68. Let's say 125.70. 70 to 126.03 is 30 pips. It's a 30 pip move that we can get out of this, right? And we can look at either this last swing low here or this level of support right there, right? But we're using the fib as a target, right? Because we're bullish against the 23% retracement, and usually price goes to the next level. It's like an elevator. We go up, hey, first floor, women's lingerie, cologne, and bras, the next level too, power tools, men's accessories, kids wear, third floor, housewares, sofas, pillows, bedding, small household appliances, right? So like a department store, but what's a department store? We go to Amazon, No one knows what a department store is, right? If you're old enough to know what a department store is, you probably go, I know what you're saying, Greg. I know exactly. Anyway, that's floors, different floors, right? And so we're looking at the price dropped, and then we're back into the sideways consolidation. but our Fibonacci is sitting right there, right? Now, now really cook your noodle if you can add, going back to that 4-hour chart again, right? Where we can actually take Fibonacci's from expansion targets to figure out how far this would go, going from the first high to the pullback. We take 3 points, and then we look for confluence. We see, okay, well, there's the 1.618, there's a 2.618, and there's a 224% expansion that we're not seeing, right? Fibonacci expansion properties. I don't see the 224. I'm going to add it in here. I'm going to add it. There's 2.24 expansion target, or 224. Oh, not 2024. 224% expansion, right? Click OK, right? So the 224 expansion, there's 127% expansion. Oh, that's not there either, right? 127%. Anyway, we're in between Fibonacci zones, right? Let me take another example. Let's take maybe dollar yen. Now here's dollar yen, and it's been trending down, right? We go to a 4-hour chart. We have the swing high. We need 2 points. We need a super high, or the highest high of the period, which is here, and we can put the date on that. Put the date on that, day of the week, right? It was January 10th, 2025. We had a high of 158.89. Man, we slid all the way down to the swing low. The lowest low we had was 150.89, right? And we can see what date that was, and that was on nearly a month later, February 7th, right? So we got 2 established points. We have a swing high and a swing low. We're going to connect these 2 lines with the Fibonacci to get Fibonacci retracements against the trend. And we'll notice some things. And I haven't seen this before, but it's always remarkable when I do something like this to see how things are line up in these Fibonacci cycles. So I'm going to go from here, drop it down to the low and match it, right? And looky, little brown cookie, as my partner in crime, Jamie cut the rope, who runs our live day trading room, where he day trades 3 days a week, Tuesday, Wednesdays, and Thursdays. And the guys who are trading, after they go through Pip and Run, they go to him, and they wind up getting funded accounts, guys, funded accounts. So I'll show you how to get involved with mentorship. And also, I'm doing live trading too on Asia session. I'm going to tell you about, stay to the end, I'll tell you about our Trade-a-thon challenge. We can trade 3 days with me. I'm actually going to trade a month with me for $97 for the first month. $97. If you're interested in that, give me a yes in the chat box. Let me know that you're interested in that. And we're going to do that special trading challenge in March. And it'll be for the whole month of March. We're going to do 3 days of Asia trading with me, and then after that, we'll have we'll raise the price a little bit, but just to give you some ammo to make some money for a month. You have enough money to be able to afford the service, right? Awesome. So we'll tell you about that. But here is our rally back up to the 50% retracement, and you can see we sliced through the 38. And if you got short here, right, you sell high, like Snoop Dogg, sell high and buy low. 38% retracement, we broke through, went right to the 23% retracement. We broke floors. This was a floor. We broke a floor. And the next target is the 50.89 area, right? And you can see how, even though we need 2 points to create a line, we had 2 points. But notice that the lines drawn with these points were respected, even though this point was not established yet. What you talking about, Willis? Look how price rallied here. We did not have a 50% retracement yet. This is like January 30th, January 17th, January 20th, January 15th. This happened here, but you could not have these lines drawn until price gets down to 50.89. Okay, that should be very spooky to you. I'm like, well, how could price respect a line which didn't exist, right? The only way you could have these lines if you knew what the low was going to be. So the low was already in, had not come in yet, so you couldn't get these lines. So once you have the lines, you look back in hindsight, wow, these things bounced off these lines, but you couldn't have the Fibonacci unless you have an established high and established low. So what's going on? We don't know, right? but it's always about my conspiracy theory that's all fixed. And if you book a call with me, I'll tell you more about it and show you how all this stuff kind of works out. But for now, we're just going to talk about Fibonacci right now, right? I won't put my tin hat on and start my podcast. But here you go. So here we've got this rally here. Now, usually we stopped right there. So sometimes when price stops right here, we may see a bounce, right? So we have the 4 hour. You say, well, great, I don't trade off the 4 hour. That's fine. We put the Fibonacci's in the higher time frame, and then we dive deep and look at how price reacts on the lower time frames to these lines. So when we're down to the 1 hour, and you can see, look, this thing, there's a tangle. There's a tangle going here. A rally up, power back down, and close below the line. Interesting, right? So we can see a continuation, right? You can throw some other things too. You can bring some other things. You can put a moving average on there, like you want to put I would use Fibonacci moving averages, right? So if you like using a 20, use a 21. If you like using a 10, well, then use a 13 instead, right? So I'm going to put a indicator trend and then moving average. That's where you find the moving average. And then you're going to add maybe add a 21, right? And exponential, and we'll click OK. And we can see that price was rallying. This is like a synthetic trend line, right? Price broke the moving average and started heading down, right? We can add another moving average as well. I like adding 2. I got 21. Instead of using a 50, let's use a 55 because that's a Fibonacci number. So I'll go insert and indicators, trend, moving average, and then maybe I'll make this one 55, and then I'll make that maybe red, right? Right. So look at that. So the moving average crossover there's a strategy in this, right? Where if the smaller moving average crosses above the longer moving average, it's a buy. And if it crosses over, it's a sell. So this has just crossed over, right? And so it's giving us a sell. We can put another moving average in. We can put an 89 moving average, right? We can take 55 and 34. We can put a 34 and 89. We can have a nested Fibonacci moving averages, right? So that we're going to bring Fibonacci not just on the lines, but also on the moving averages. We're going to using a moving average, and then we can use, we have a 55. Let's do a 34, right? Maybe make the 34 yellow, right? Right? So we got 30, we have a 13, a 21. No, we don't have a 13. We have the 21. We have 34, and then we have a 55. And for good measure, let's put the 89 moving average in. Insert, and then moving averages, and we can put a 89, and then like 54, 55, 34, 39, hike. No, it's not football, right? Deep sky blue, right? So you can have this banded moving average. We have a downtrend like we had earlier. Look, the rally, pop, rally, through, and the crossover at the 50% Fibonacci, the drop, the rally back to the 50, and right at the curve or the peak of those moving averages, right? And now we're below the moving averages. We're bouncing off the 23% retracement. I would look for price to come into this zone, this area of moving average, the convergence. This is like a nest, it'll act like a ceiling. Sometimes it acts like a basket holding up or or cradling price, or it can form as a ceiling or a barrier to keep price from going up, right? So now I'm looking for this area to come into play where price could come against, okay? So we have downward Fibonacci's, right? We can have another downward Fibonacci because we have an established swing high, right? We have an established swing high here, right? We can do this again. We can nest this stuff up. Not nest it up, nest it. Nest it up. We can nest them together, right? So we have an established high and established low. Anytime we have an established high and established low, we can put a fib on it, right? Like Beyonce, put a ring on it. You know, I'm a singing lady, put a ring on it. If you know, we're gonna put a fib on it. We're just gonna put a fib on it. We're not gonna put a ring on it, we're gonna put a fib on it. We take a fib from that high to that low, and what I'll do, so it won't get confusing, I'll make it a different color, right? Maybe I'll make it you know, green, right? And so we look for price to bounce from this 23% retracement, right? But it's the upward movement should be limited because we're in this downtrend, right? So price will probably move. Look, 23% retracement, like it hit this level and bounced back down, right? And it could bounce back into this area here. This 38% retracement is a typical line of resistance. And that would get a very good place for us to short. We would like to sell here. This is how we sell high in a downtrend. Sell high, right? So we want to sell. We want to sell in here. That would be a nice. We sell here. It's like smackdown, right? It's like rejected, right? Ball rallies up. They shoot it up and they slam it back down, right? And we have a really good low risk entry at that area. However, price can do what it wants to do. It can just drop from here, right? I would just be careful of any drop because what will happen is buyers will step in and then you get short in a downtrend and lose money. How many times have you seen price rally against you, right? So you want to maybe set yourself, I want to sell to 38 and, you know, if I miss it, I'm not going to chase it. But you would like to take your entries anytime you get into this nest, when price rallies into this nest. These provide these really low risk entries, and then when we get to a Fibonacci, then we can be more sure about the level. Now you understand there's Fibonacci's going down. There are also ones going up, right? So like from this low that we had at 150.89, we had an uptrend, right? And so I know it's gonna get a little complicated, but I'm gonna help you out. I'm gonna change the color of it, right? And maybe we'll do something. It's another family, maybe like dark orchid, right? And then maybe make it a little thicker, maybe, right? So these are areas, and you can see price rallying, bouncing off these areas, right? And now these areas act as support and resistance. And when you see two levels or multiple levels combined, it becomes a very tough area to stay. Like here, we had a 23% retracement from the down move, a 50% retracement from the up move, and it creates this little barrier, this little zone right in here between these two lines or between these, where it becomes very significant areas that we should take note of. When you see upward and downward fibs, I was teaching this to my advanced mentorship students, you know, that these areas are where you're gonna like look at to where you're gonna to either, you know, to look to sell, right? Or, you know, you could do a counter trend and try to be a cowboy and buy the bounce in there. But this area is where these, what we call it a confluence of Fibonacci's, are going to be particularly strong and price is going to hang out there, right? But if we see a continuation of this downtrend, right, and we rallied up above and now we're heading back down, or our goal is to look to try to sell this sell it high for a move back down to that 150.89 area, right? Now it's going on Thursday and Friday, so we may rally. Usually it's Freaky Friday, turnaround Tuesday, manic Monday. So we might get some type of, after this big decline, we got maybe some type of a bounce here, right? But we can go down to smaller time frames. Once we have our framework already set up, we can go deeper, right? We can go into like a 5-minute chart. We've got the structure here. Drop down to a 30-minute, drop down to a 15, and now you can see, okay, look, we got a Harami pattern, a reversal, right? How far does this reversal go? Do we want to trade the reversal, right? At 74, where else at quarter line, 75, we could move back up to the next fib, which is the 23% retracement here, or we can move up to that 38% retracement, right? And that gives us almost another 60 pips. It's all already moving now, right? See, 76 by 78. We've got this Fibonacci area here. We break that zone, and then we probably so we're inside this ellipse. Let me see if I can object list, and let's find the ellipse and delete that. Oh, I just want to delete the ellipse. And there's another ellipse there, right? There's two of them. Yeah, maybe delete that one. Oh, there we go. The ellipse is gone. Okay, so here we are on the 1-minute chart. And we can see price bouncing. That 23% is coming in the challenge. Let's say we got long at 75. We should be already in the money. You can see that it's shrinking against the moving average and that barrier, right? And so, we have this barrier is nest of moving averages acting as a ceiling. We have the Fibonacci there. And then you have these two Fibonaccis, the downward and upward ones meeting and then creating that zone, that barrier. And we'll see if price, wages war against it and breaks, right? Or maybe we might have a double top here, and that makes a great short. And we can see the power of the Fibonacci line, right? It reinforces the high that we see here. We don't say, oh, that's just a regular high. No, it got stopped by this line, 52.79 line, right? We have our Fibonacci moving averages, right? This is our 21 right there. And then we hit this 34, right? And now we're heading back down, right? And we can do this for this works for any pair. We can even go to gold, or we can go to NQ. Let's go to US Tech, which is the NASDAQ 100. And you can see that we have the same kind of setup. We can go up to a 4-hour chart. And you can see that we have a swing high. We have an established swing high. We have an established swing low on a 4-hour chart. This 4-hour chart of NQ on the platform is called US Tech 100 or NASDAQ 100. Price is going to be a little bit different. We go from the swing high down to the swing low. The low we had was around 20,522. Swing high about 22,218. And so here are our Fibonacci's. And we can see that we broke that 70% retracement, but we tested it numerous times. We rallied from the low. We rallied to the 70% retracement. We had a double top. Price dropped through the 23% retracement, but closed back above it. Rallied up to the 38% retracement, hung out there, right? And then rallied to each of these levels and bounced. And so can you imagine if you're trading this? You're actually there's another Fibonacci, a rare and it's one of those Fibonacci's of last resorts, and I'll tell you what that one is. And the 786 Fibonacci was really discovered by a man by the name of Larry Pesavento. He wrote a book called Astrocycles. I got a chance to meet him. I'm a market technician junkie, and I'll go there. They're my rock stars. I don't look at Taylor Swift or Snoop Dogg. I'll see Snoop Dogg, but also look at John Bollinger of the Bollinger Band. George Lane Stochastics. I got Thomas Bulkowski. These masters of technical analysis. They're my rock stars. Mark Douglas was my mentor. And, so I love, because these guys, they teach you how to make money, right? They don't want money for records and stuff like that, record deals. But, these guys are rock stars, real rock stars. And, while they're still alive, I think George Lane passed away in 2006. I didn't get a chance to meet him. Jordan Appel died during COVID. Didn't get a chance to meet him. Wells Wilder died way before, probably before I was even into markets. But I got to meet John Bollinger. I got to meet, Tom DeMark. I got to meet these guys, and it's wonderful to learn from them. This whole science of technical analysis was built on their work. Steve Neeson, who discovered candlesticks, I believe he's still alive as well. So we're going to add this one that's called, it's the 0.886. I call it the smooth jazz. Like on the radio stations at the far end of the dial, 88.6 smooth jazz, KWAVE, Las Vegas, Nevada, right? Smooth jazz, 88.6, right? On your FM dial, right? Oh, and we're right there, 88.6. Bingo! Ring the bell. So what happens here? Usually we tested twice, or tested twice, and we knock 3 times on the ceiling if you want me. Twice on the pipe. Beep, beep means the answer is no. Tony Orlando and Dawn, 1974. We're knocking on the 88.6 for our chart. Going to a Friday. Might have some profit takers. 21,873 NASDAQ 100. We rallied into the 88.6. Happens to be 22,031 spot 14. And this is the spot. The futures may be different. Let's go ahead and drop it down to the 1 hour chart. And you can see we rammed right into that level, rammed into it, 88.6, 30-minute chart, pull back. Are we going to try it? If we have a high and a lower high with a structure change, and we have a structure change, we could drop, right? We have an established high and established low based on the 30-minute chart. We have a low here. We have a low here, the lowest low. So we take this low and this high, right? I'm going to change colors. Colors. All right, we're going to change color. We're going to change it back to yellow. So let me make it so you get low, right? So we have these fibs from here to here. And there's a nice little confluence right there. We might have a sell-off on Friday, right? If we can't break 2231, right? We can't break that. Let me break this down, right? Right there, that's the line, right? 22,031. Well, then, we have 3 drives to a top, 1, 2, 3 drives. Usually after the 3rd drive, price drops, right? And so we get down to, I'm going to put a number on that, put a number on this. That's 21,874. So we see a severe sell-off, and they'll give it some reason. Well, Trump said this, and this went this, and Putin did this, and this one, And it's like, no, it's technically these guys have made money all week, and they're probably going to take some profit off the table, right? And the way they take profit on a buy order is they sell. So they sell to take profit. It does not mean that they think anything is worth anything less. They just don't want the overnight exposure. They don't want to hold over the weekend. And so they're going to come back on Tuesday and make it all happen again, right? So we can see a pullback to the 38% retracement, be 21,773. But I think this will be a great target to go for. And guess what? How long did that take us? It took us about 5 minutes, 10 minutes, me running my mouth, to kind of like get basically the layout. Like if you're in the military, I was never in the military, but I watch a lot of movies and I have friends. And you want to look at the whole territory. You want to look at a big picture. You want the high ground. The higher time frame is the high ground. On the 4-hour chart, this is like a 50,000 foot satellite view where you got a satellite view and we can see all the targets down below. But if you're on your phone on a small little screen, you are not going to have a true perception of what the real trend is or what's going on. You don't know what's going on. You're going to be a victim of what Alan Farley called time relevancy, trend time relevancy error. You're looking at something, you think it's an uptrend, but it's really a retracement in a downtrend, right? Or you maybe if it starts going a downtrend, you really think you're in an uptrend. You got everything upside down. Why? Because you're looking at too small time frame, right? If your phone only has this much view, you think you're in a downtrend. And I see people all the time, they say, oh, I could have got this. I didn't. You'll always be behind. If any of you have looked at the chart and go, man, if I had just stepped here, did this, you're looking at too small a time frame. You need to go out and you need a screen, a big screen. You need to stretch out this thing and get lots of data, right? And you can see all of this. This goes all the way back to May of 2024, June of 2024, June of 2024, all the way to now. And now you understand that we're in a bullish scenario, right? And we can see the levels where prices, in fact, we could take a Fibonacci from that swing low that we had back August 2024, like a flash crash, and go right back to this high, right? And I'm going to make this a different color so it won't confuse us. You're probably already confused, but it's okay. If you try practicing, the moment you get off, what you need to do is get your charts out, guys. Get your Fibonacci's and start drawing them. And that way, what you're learning from me, this is the trick that I use to accelerate how my mentor students learn. As I tell them, I say, after I do my 2 hours of coaching, get in that chat box and start posting examples, start writing down what your nuggets, what your biggest takeaways are. Because the moment you do something with that knowledge within an hour, you're going to be able to remember it. Because if you want to go away, do something else and turn this off, you will forget 90% of what I'm telling you right now. I can give you the secrets of how to trade right now. If you don't do anything with it within an hour, guarantee that you will forget it, right? So it's important for you to not just watch it and lecture and say, that's really good. Man, I felt really good. And all it's going to be is a feeling tomorrow. You got to do something with it. So here we go. We got our fibs there, and we have big whole number, 23% retracement down at 21,009, right? We rallied to a double top. We could double top here at the old high, and we could come back and retest that area, this 38% retracement, really, and there'd be a mini flash crash. We go, oh my God, everything is going in the handbasket, And these guys are going to be scooping. They're going to be scooping this stuff up after February. February is usually the worst time for stocks. And we probably really haven't gone anywhere. We've just been chopping sideways for the month of February. Typically, February is the worst month, but we're still maybe break even or slightly positive for the year for February. So it's not bad. Okay, February's usually terrible, right? So this is not that bad. So we might get a crash, and if we do, well, we'll still be in an uptrend, and this actually would represent value, right? Down here at the 38% retracement, 20,400 would be value. And if we got down to the bottom of the channel at 21,009, that's value. Anyone who bought here, if you have like buy stops along here, you got paid. As soon as it hit the line, it rebounded. This thing is it's like that Tyrannosaurus Rex, that in Jurassic Park, And then, he runs up against the thing and it's like electrocuting him. You know, it just bounces off that area and it gets shocked. And when it gets shocked, then it rebounds, right? It rebounds again, right? So, it's just like that, right? Okay, yeah, like right? So everything they touch, it gets shocked. It drops. So you get down here, and you got your buy limit, not buy stop, but buy limit. Buy limit is an order you place below the market. So you have your buy limit in this zone, this 2109, 21,000 area. Price drops there on a spike low, and you got your buy limit there, bro. You're gonna get paid, right? You just got because look, you got 23% retracement on one level, another 23% retracement, and a 38% retracement, all in the same area, and a 161.8 target too. So you got all this going on here. There's lots of confluence here where buy limits would just make you just get you paid, right? Which is very, very powerful. So Fibonacci's can be used to get you some really great entries. Whether you want to start your 4 hour, work your way down, and get you want to make sure you get a lot of chart data. I know guys that, oh, I got a tablet. It's like the market doesn't care about your tablet. It doesn't care about your phone. If you can't see what's going on, I don't like turning left or right. If the guy is socking you in the side of the head, you better turn. I don't want to turn. I only want to look over here. I'm getting socked in the head. Well, you better turn your head so you can see. I'm being socked in the head. Okay, let me duck. That's what happens when you use your phone. You're getting socked in the head and you can't see what's coming because you've got these blinders on because you got all your chart data confined to the small little space, guys. Now, don't get me wrong, my guys kill it on the phone, but what they do is they actually take a lot of trades. They start off with their charts, right? They start with their charts and they work their way down. So they'll throw up a bunch of yeah, trying to. My guys are always putting up their charts and they're not up here, right? Oh, there we go. Right. So they'll do the phone, right? They'll do the phone stuff. Tons of wins from Jimmy. Just hitting it, hitting it, hitting it, hitting it, hitting it, hitting it. They'll just hit, right? But on their phone. But they start with their computer first, right? They look at the big map, they look at the big chart, and now they know that, hey, all I'm going to be doing is buying, 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 right? Buying, 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 buying. That's what they're going to be doing. Why? Because they looked at their higher time frame charts first, and then they're not relying on the charts on the phone, right? They're actually, I mean, they actually so my stage 3 guys, they are they're there's Jeff, Jeff's always gonna kill it, boom, 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 right? We're gonna who else is doing this? I saw Dirk. Dirk put some stuff up. He put something up, right? Yeah. And so we just what we do was kind of like just hit the button, just hit the button, just hit the button over and over again, baby. Just hit it. I'm so proud of my guys. They are really at stage 2, stage 3. We're in 3. Must have been stage 2. 2, yeah, 2. And yeah, so the guys that we are always popping our trades in, and maybe it's Did he? I think he popped some trades in here too. Okay. Oh, this is Antoine. Yeah, Antoine was messing around. Yeah, one loss. Can't be perfect. you know. And then we have our guys that have actually done the really cool things with the prop trading, right? With Apex, we probably like 200 and something $1,000 in Apex stuff, right? With James from the month of January. Just the certificates everywhere. William at 50,000. Yeah, it just we just got Kenneth, Daniel with 50,000, right? And then we had who else we had in that, and then we had Jabril. Jabril, I think he had 150,000. Forgot about Jabril. You go, bro. Right. So we got a lot of people who have been hitting it with this. That's Jamie's setup. He's pipping and running. He's got me. He's watching me on this trading thing. I love Jamie. Jamie's like my brother, but brother from another mother, my trading brother, right? In fact, if you look at my setup, I have the same setup. I have my monitor, on my laptop here, and the keyboard, and we have the exact same keyboard. And he's in Saudi Arabia. God bless him, right? So my guys, they're hitting it. I think Dirk posted in here. There he is. Yeah, Dirk. See, I learned the pip and run from Dr. Greg all last year. Nowadays, I just pip and walk. Same process. 535 real money, profit, not demo, on a small grocery getter account. Still letting it run. Easy day, no stress. Crawl, walk, or run. Dirk. Dirk is another brother. My brother from another mother in Texas, Henderson, Texas. Big shout out to the great state of Texas. And he'll double and triple a Social Security check. He'll throw it in there and he'll double and triple up, which is fantastic, guys. And these are the results. This is what we do with Pip and Run every day. And there's always results from my students. Albert's going to go into stage 3 or stage 2. He's moving. Jimmy's moving to stage 3. They move up the stages, and then they move right into stage 4, which is prop trading, and they can get those. We have an organized process for minting millionaires, guys, because these guys, they're showing when they are opening 4, 5, and 6 Apex accounts. They can, once you pass a challenge, you can get another one. So how many would you get? Well, he got a lot of them. Some of them have, $1 million or more under management, and they didn't know what a pip was, right? So there's an opportunity cost of not working with me, because every year that you don't do it, you are giving money to the market, and other people are making money, and you don't have access to capital, right? I'm giving you not only, I'm giving you a strategy so you can keep your challenge, but you can also continue to prosper in your account, keep your account going, and keep pulling money out of that account, that $50,000 or $100,000 account, or that $1 million account. And these guys are controlling 5, 6 accounts with one account, one master account, and scaling their profits. So they still work the same 2 hours, but now they do it on 5 accounts, right? If you have a 50,000 account and you've got 6 accounts at $300,000, and the average, we do about 10% a week. So 10% of 300,000 is 30,000 a week. So my guys are doing like 30,000 a week. I think Bill did $7,000 in a day. So you did 30,000 a week times 4. That's $120,000 a month, right? Times 12 is $1.4 million a year, right? So would you pay $25,000 to learn how to make $1.4 million a year? Well, guess what? It's not even $25,000. It's not even $15,000, not even $10,000, right? Well, if you want to find out more of how to get involved with me and how to work with me and how to get your share of this prop trading bonanza that's going on, they're giving away hundreds and millions of dollars being paid out of these prop trading firms, which we have a relationship with. And we have a proven 4-step stage process to get you where you want to go, right? And it all started, and we've been doing the stage process before there was a prop trading challenge. We've been in business for 10 years, guys. And there wasn't any prop challenges back, 10 years ago. So in fact, I was the prop challenge. When my guys were good, I actually put money myself behind them, right? I put my own money, my own capital behind them, and then they would trade. And someone would blow up, and then I didn't have the 5% risk. I wish I would have thought about doing that. I let them take it all the way down to zero. I learned my lesson. But when companies came up and started putting their money behind my traders, and my first trader made $47,000 in one day, I go, hey, you know what? We are going to, our system is going to align with the prop traders, prop trading requirements to make sure our students can qualify to get their share of that money, right? I think Robert Lopez was our first from Houston, Texas, single dad of two, and he was my first guy. And he told me, he says, he wrote me this thing. He said, well, thank you. And why are you thanking me for? He goes, I made $47,000 on my funded account for the day, pipping and running at $47,000 in a day. And he paid $15,000. He put $5,000 down. He didn't have any money to pay me the rest. He made the money. He paid me back the next week. And we're like, I thought you didn't have any money. Where did you get this $47,000 from? He goes, oh yeah, I did. It's prop funding. I go, what's prop trading? He goes, oh, it's when the company, you pass a challenge and you get. I go, oh my God. And we just start throwing all of our guys in that. And so they're all getting paid, guys. So that's the story of it. Robert is our first guy that did it. Now we have multiple guys. We go, funded trader, we got guys all over, all over the world grabbing money, right? Jabril's past challenges and then we had guys passing under my forex funds, that kind of fell apart, and some of the other prop trading firms. But these future ones are very good, and they're very reliable. And there's people getting certificates and things like that. So I want to really welcome you to join me, to join Pip and Run, join mentorship, reach out to me. You owe it to yourself, because if these guys, my guys, are making on average $50,000, $60,000 net minimum, right? Working 2 hours a day, I mean, don't you owe that to yourself? You want to spend more time with your family? Are you tired of working that job? Don't you want to escape the rat race? Don't you want to get free? Don't you want, don't every month you're sitting here and you're watching these people pass you by, going through the stages and getting paid. It's your turn now. It's your turn now. Reach out to me. We got payment plans. I'm willing to risk by letting you have access to the system for a lot less, knowing that you will make enough money, more than enough money to pay it back, right? I mean, you guys go into debt for cars that depreciate in value. You go in debt for a flat screen TV, or for some shoes, or a vacation. Yeah, you had a vacation, you had a great time, but guess what? You're gonna come home to reality that you couldn't afford that vacation, and you're gonna be paying for it for the entire year, right? Rather than put your nose down, learn this skill, and you can have all the vacations you want. You can go anywhere in the world you want. You have FU money to do what the FU you want, to do what you want to do. But you can't do it, can you? Why? Because in the Marshmallow experiment, they had an experiment where they put these kids in a room. They told the kid that, hey, if you can eat one marshmallow now, or if you wait for an hour, we'll give you 2 marshmallows. So they had a marshmallow on the plate, right? And the kid sees the marshmallow, he eats it. Well, guess what? He doesn't get the second marshmallow, right? But then the kids that could wait and waited for those 2 marshmallows, what they did was they studied those kids over the next 40 years, like lab rat experiments. The ones that ate the 1 marshmallow ended up working at dead-end jobs, with broken marriages, with, they were constantly in financial situations all the time. these kids that grew up who ate the one marshmallow, they basically had a screwed up life, right? Why? Because they did not have delayed gratification, being able to wait for the best thing. Now, the kids who waited and got the two marshmallows, they followed them. They became business owners. They had stable families. They had good incomes. And you look up the marshmallow experiment. Look it up. Type marshmallow, go ChatGPT, talk about the marshmallow experiment happened in the 1960s when they could do like whack stuff to people and not get in trouble with the with the different authorities. Like, so anyway, look at the marshmallow experiment. And you tell me, are you a one marshmallow person or a two marshmallow person, right? Because if you're not in Pip and Run, if you're not learning and putting your nose to the grindstone, I mean, within a couple of weeks, you realize, go, my God, I can count to 5 and know my ABCs. This thing is easy, Greg. I go, yeah, because I'm a middle school teacher and I deal with colors and shapes. Can you count to 5? Yeah. Do you know your ABCs up to the letter C? Yeah. Do you know your colors? Can you tell red from green? Yeah. And can you recognize simple shapes? Triangles, rectangles, circles. Can you do simple math like addition and subtraction? Yeah. Well, if you got all that, that's all you need to learn the system. I know you think, well, Greg's a doctor and he's very sophisticated. I'm going to get in there. I'm not going to understand anything. Believe me, I make it real simple. Green up, red down, buy it 2, sell it 3, buy it 4, sell it 5. Really simple stuff, right? And in fact, one guy started cussing at one guy going, I can't believe how effing easy this is. I struggled. I took this course in ICT and TMV and blah, 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 blah. Wyckoff this and blah, blah, order block, blah. I go, no, I don't know about any of that stuff. I just know count to 5, know your ABCs to the letter C, and know your colors and shapes. That's it. That's it. The guy goes, you charged all this money for this? I go, yeah, but are you up? Are you hitting it 95% of the time? 94% win rate? Is that you can't even believe? I tell people, I tell my students, make sure you hook your account to my FX book to get third-party results audited. Because if you don't, no one is going to believe you. No one is going to believe your results, because once they see that your track record and you can do 473, 500%, I have guys doing 1,000%, and it sounds like a scam. But I tell you what, you fall for scams all the time. I hear all the time, oh, this guy said they give him Bitcoin and they give him $30,000 in Bitcoin. I don't mean to make fun of you guys, but I'm really insulted when you say I'm a scam when I have 30 years of social proof. My social media accounts are older than maybe some of you. Okay, I've been streaming stuff on social media for the brokerage since 2009. Okay, you look up Dr. Greg McLeod, Daily FX, Forex, FXCM. Look at any of those search terms. You're going to find tons and tons and tons and tons of stuff on Twitter, on YouTube. Not so much on Instagram. I'm not much of an Instagram person, but lots of Facebook stuff. But I've been around for a while, and I haven't been investigated yet, and I'm not going to be investigated. Why? Because I have hundreds of testimonies, thousands of testimonials of people who have changed their lives. My attorney from the Cayman Islands retired. Now he takes care of his family, and he's able to travel the world. If you go to my YouTube channel and you go to my come over to my YouTube channel, come over to my to all the testimonies that I have here, and watch them. I mean, I didn't pay any of these people. I didn't. Right? You go to playlists, and then you go to our testimonies, and there's 88 video testimonies here. And I've got a bunch of them that I haven't even installed yet. People from all over the world, from all walks of life, millionaires, millionaire traders. There's Dirk right there, the Texas trader, Robin Brooker's blind. All these people, all these success stories, you can't argue with results, right? But yet you fall for the scam on Messenger or in Telegram. Give me your Bitcoin address and send me $30,000, and you fall for it, right? But yet I'm showing you all this and you haven't signed up yet because you're not sure, right? And one guy goes, well, how do I know that you're any good? I'm like going, bro, do your research. Stop looking at cat videos and pornography. Look up Greg McLeod and you'll find all the information you need to make a good decision. But you got to understand that 90% of all traders lose. 90% lose. And they lose because their brain is wired for failure, right? And that's why you'll always pick the wrong thing, right? Unless you are praying to God and God comes to you. And I've had people tell me, I don't know what your relationship with God is, Greg, but God told me to sign up for Pip and Run. I go, yeah, okay, sure. You know, I'm not opposed to that. In fact, probably my greatest advocate has been God or some angels or the Holy Spirit reaching down to people and speaking to their hearts. I had a guy in church say, you know what? God told me that I need to learn from you. What do you teach? I'm like, going, I teach how to trade. That's exactly what I want to learn. I'm like, okay. So the only way you're going to probably, because the world is ruled by Satan and you're probably going to get deceived. He's the great deceiver. And so everything you're going to find on Messenger and Telegram is going to deceive you and rob you blind. And so what you're going to do is, eventually you're either going to pay me because I'm going to take the other side of your trade. My guys are going to hit your stops and they're going to get paid. Okay. And we have to have fresh meat in the market. So you could be the fresh meat, and that's fine. Because you're going to pay me tuition. Either you're going to pay me with your losses because I'm going to take the other side of your trade, or you're going to join my program and be a predator instead of prey, right? Instead of you being the antelope being chased by the market, you're going to be the lion. You're going to be part of the squad, right? We have the squad of lions where we go, let's go, we're going to go eat today, right? And while everyone's saying, oh, let's go short right now, I was like, okay, we're going to go long. 90% of everyone's wrong. So whatever they're doing, we just do the opposite, right? So anyway, I want to thank you so much for joining. I hope this information was helpful to you. I look forward to coaching you, to taking you to the next level. If you feel you need to invest in yourself and you want to find out what all is necessary, then I'm going to give you you can reach out to me on Messenger, say, hey, Greg, I am tired. I'm sick and tired. I'm mad as hell. I'm not going to take it any longer. My January sucked. I don't want my whole year to suck. And I want to start fresh now. And if you're willing to be coached, and if you are committed to success, and you're more serious than curious, then go ahead and DM me and reach out and say, hey, I'm ready. Say, I'm ready. I'm ready in the chat box. And let's do this thing. Let's get paid, okay? I want you part of my team, part of my trading floor. I showed you some of the guys that, with all the prop trading firms, we're putting together a prop trading group to get funded and financed, not financed, but they're going to get, they want you to manage their money, right? That's what and they want good traders. And I give them good traders. And I want you to be part of that team. You got to decide if you're worth it or not, okay? So anyway, you guys have a great weekend. We got one last day of trading. Unless you're in the net is crushing it. She loves trading on Saturdays. The girl is on fire. Big shout out to Nanette. And we'll talk to you later. Cheers, bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!